Tired of moving averages that confuse more than help? What if you could see the market's trend with one glance? Stick around. I'm about to show you a game-changing tool that does exactly that. If you've ever felt overwhelmed by too many moving averages or confused about which direction the market is actually trending, this tool is about to make your life a whole lot easier. Whether you're a beginner looking to follow the trend or a seasoned trader trying to avoid choppy markets, this indicator might just become your new favorite. In this video, we're diving into the Moving Average Trend Meter by ukutaLabs, a sleek visual indicator that cuts through the noise and gives you a clear snapshot of trend strength at a glance. The Moving Average Trend Meter bases its analysis on the alignment of 4 key moving averages, typically representing slow, medium, fast, and baseline price dynamics. These moving averages can be many types, including EMAs or SMAs, depending on the user's preference, and are calculated based on different look-back periods. Each moving average reflects a unique layer of market sentiment, from recent price action to long-term trend direction. The core logic behind the indicator involves checking the relative positioning of these moving averages. When all 4 are stacked in proper bullish alignment, meaning the fastest period MA is on top and the slowest period MA is at the bottom and prices closing above these MAs, it signals a strong uptrend. In contrast, when they're stacked in reverse order, it indicates a strong downtrend. This layered approach allows the indicator to assess trend strength and clarity without requiring the user to visually interpret multiple lines on the chart. Rather than overlaying these moving averages directly on the chart, which can cause clutter or visual overload, the trend meter summarizes their relationship into a color-coded signal. Each state of alignment or misalignment is translated into a specific color: green for bullish, red for bearish, and a blend, such as purple, orange, or gray, when the averages are mixed or crossing over each other. This not only simplifies the trader's visual workflow, but also provides a quick, intuitive read on market conditions at a glance. Before we jump over to TradingView, there's one last thing to note. Each bar in the indicator represents a specific moving average. The bottom row corresponds to the slowest moving average, the middle row represents the medium-term average, and the top row reflects the fastest moving average. All right, now that you have a clearer understanding of how this indicator works and what the color signals represent, let's head over to TradingView, add the indicator to our chart, explore the settings, and dive into some real-time chart analysis. To get started, go to the top of your TradingView workspace and click the Indicators button in the main toolbar. Next, type Moving Average Trend Meter into the search bar. For this video, we'll be using the version created by ukutaLabs. Go ahead and click on it to add it to your chart. I'll also add the link for this indicator in the description below. All right, let's take a look at the settings for this indicator and see how you can customize it to fit your trading style. We'll begin with the Moving Average Lookback Periods. As mentioned earlier, this indicator uses 4 key moving averages to determine the overall trend direction. These settings are fully customizable, so you can adjust the moving averages to fit your trading style. Whether you're scalping quick moves or holding trades for days, you can fine-tune the timeframes to match your strategy. Next is the Moving Average type setting. With several options to choose from, this makes the indicator flexible enough to work across different assets and timeframes. The Moving Average Source setting lets you choose which price data to use when calculating the moving averages, such as close, open, high, low, or even weighted values. Just like the Moving Average type option, this adds another layer of flexibility to help you tailor the indicator to your specific strategy. The color settings let you customize the look of the indicator to match your trading style and chart preferences. We'll finish with the Display Mode setting, which offers 2 options: Classic and Optimized. We'll go over both in more detail next to start the chart analysis. Each display mode has distinct characteristics that set it apart. To clearly show these differences, we've placed 2 instances of the trend meter on the chart, stacked one above the other for easy comparison. On the bottom, we have the Classic mode, and just above it, the Optimized mode. At first glance, you'll notice that Optimized introduces an additional color, gray. This subtle but important enhancement can make a real difference in strategy decisions, especially if you rely on trend confirmation for your entries or exits. This extra color isn't just for aesthetics. It serves a practical purpose. Gray highlights periods of extreme pullbacks, sharp reversals, or choppy price action, which can be misleading in a pure trend-based view. By distinguishing these neutral phases from strong bullish or bearish momentum, Optimized mode helps reduce false trend signals and gives you a clearer picture of when the market is trending versus when it's ranging. To make this demonstration more insightful, we'll include the ukutaLabs Fibonacci Moving Average Indicator. This allows us to see how the trend meter processes these moving averages and translates them into actionable signals. First, let's zero in on the middle section of the chart. Notice how the moving averages twist and intersect repeatedly? This kind of movement is a strong indication that the market is in a range rather than a clear trend. Here's where the optimized version starts to shine. Notice how the classic version prints bearish signals, while the optimized version switches to solid gray bars, highlighting uncertainty and helping you avoid false trend entries. This isn't to say that classic mode lacks value. When applying the trend meter for higher time frame analysis, those bearish signals reflect a significant pullback from the highs, an insight that can create selling opportunities when trading on lower time frames. Picking either display mode is all about what fits your trading style best and how you want to avoid or manage those tricky trending or choppy market phases. Next, let's examine how this bullish phase begins to lose strength. Initially, we see a few pullbacks signaled by orange bars, a typical occurrence in a healthy uptrend. However, given that this move follows an extended bullish run, these orange bars take on greater significance, acting as an early warning of fading momentum. The signal becomes even more evident once price closes below the moving averages. As mentioned, orange bars during an uptrend are not unusual. In fact, they often represent healthy corrections that can create buying opportunities, especially when the overall bullish structure remains intact. However, the story changes when these orange bars start to transition into red or gray. This shift is critical because it typically signals that market sentiment is no longer purely bullish. Instead, it suggests that sellers are gaining strength, and a potential reversal or deeper correction could be on the horizon. Finally, as the moving averages begin to cross downward, the trend meter confirms this sentiment change by flipping to red and gray bars, clear visual cues that the bullish trend has likely ended, and caution is warranted for anyone still holding long positions. We'll conclude this part of the analysis by looking at the start of a new bearish trend. At this point, the moving averages have completely inverted, and the trend meter now displays solid red bars, confirming the shift in momentum. You'll also notice a few purple bars appearing within this sequence. These purple bars function similarly to the orange bars we observed during the bullish phase. They often indicate temporary pullbacks within an established trend. These moments can present excellent entry opportunities, especially early in a trend, offering favorable risk-to-reward setups for traders who are looking to align with the prevailing trend. As long as the bearish structure remains intact, the goal is to ride the trend lower, scaling out or locking in profits along the way while keeping an eye out for any signs of reversal. Now that you have a solid understanding of how the trend meter generates its signals, let's review a few more examples in a cleaner, more natural chart setting, this time without the moving averages. All right, let's jump in. We're looking at Ethereum on a 4-hour chart, and here's something important to keep in mind. Like most lagging indicators, this one also gets better the higher the time frame. That's because bigger time frames cut out all that intraday noise and make the trend a lot clearer. You'll deal with fewer false signals, less chop, and way more confidence in what you're seeing. Think about it like this. On those tiny time frames, every little tick can throw you off, and you end up getting whipsawed left and right. Higher time frames filter out that messy back-and-forth price action and focus on the moves that actually matter. So, instead of reacting to every little squiggle, you're aligning with the true direction of the market, which makes your trading decisions so much easier. For this example, as mentioned earlier, we won't be using the moving averages as a reference. Instead, we'll step through the chart in playback mode and analyze the indicator alongside price action in a simulated real-time scenario. All right, let's dive in. The trend meter is showing solid red bars, confirming Ethereum is firmly in a bearish phase. Since our focus is on spotting the start of a new trend, we'll simply monitor the market for now. Checking back on Ethereum a couple of days later, the trend meter is now displaying purple bars, signaling a strong pullback or a potential weakening of the bearish trend. For now, we'll continue to monitor to see whether the downtrend resumes or begins to transition into a new phase. Jumping ahead another 6 bars, the trend meter is now showing gray bars, signaling some indecision and consolidation at the current price levels. Following 5 days of sideways consolidation, the trend meter has shifted to solid green bars, signaling the possible end of the bearish trend. This consolidation phase has also created a well-defined price structure, providing a foundation for building a trade setup. 2 days later, the trend meter is showing signs of increasing buying pressure. That said, we're still stuck in consolidation, so it's important to stay patient and wait for a clear breakout. A bullish engulfing bar has pushed Ethereum out of consolidation, marking a potential breakout. Now, we need confirmation that this move is genuine and not a fake out, so we'll keep a close watch. Price has retraced into the consolidation zone, creating a textbook break and retest scenario. As long as this area holds as support, the bullish bias stays in play. This push out of consolidation gives us the entry we've been waiting for. The plan is to place our order slightly above the bullish candle and set our stop just below the consolidation area for protection. We've stayed patient and waited for the right setup. That was the tough part. Now we just sit back and see what happens. It took the market a few more days to build momentum, but when it finally broke, the bullish move gave us a great run that lasted for days. This trade is a perfect example of how the right tools, solid technical analysis, and, as in this case, plenty of patience can dramatically improve your chances of catching high-quality setups, while reducing the number of stressful positions caused by poor timing. In conclusion, this walkthrough has shown just how important patience, proper analysis, and the right tools can be in trading. We started with Ethereum in a clear bearish trend, monitored multiple phases of consolidation, and waited through weeks of indecision, all while using the trend meter to guide our bias and avoid emotional decisions. Along the way, we discussed how to interpret changes in bar colors, identify key breakout and retest setups, and remain disciplined when price action didn't immediately confirm our expectations. This entire example reinforces a key lesson. Trading success isn't about chasing quick wins. It's about preparation, patience, and execution. With the right strategy, tools, and mindset, you can turn market uncertainty into profitable opportunities. Thanks for watching. If this video helped you out, give it a thumbs up and subscribe for more awesome trading insights. Until next time, trade smart and stay consistent.